Now, hello everyone, and welcome to the latest edition of our Meet the Partner series. Today I'm joined by Neil Reynolds from Reynolds Financial Limited. Hello, Neil.
Hi, Michael. How are you doing?
Yeah, not too bad, thank you. Yourself?
Yeah, very good, very good. Bit of a strange few months, but apart from that, yeah, plugging on all okay, actually.
Yeah, good. We'll touch on that a bit later. I think we'll start by if you want to just give a brief outline of what you do and what you can offer customers, that'd be great.
Mm-hmm. I suppose in a nutshell, it's more to do with later life financial planning. It tends to specialise around equity release and lifetime mortgages. And hopefully today I'll be able to dispel a few myths about that, because there's quite a lot of myths out there about what people think equity release is and actually what it is. And then on the back of that there is a lot of estate planning involved with that as well, such as wills, power of attorney, protecting your assets through trusts, using various vehicles if there's any inheritance tax issues, and funeral planning and stuff like that. So I suppose in a nutshell, or 4 or 5 sentences actually, that's pretty much what I do.
So, and you're based in Cwmbran, is that right?
Yep, Pembroke House is where the office is. Yeah, based in Cwmbran, but I tend to cover, we cover the UK anyway, so we're certainly not limited to South Wales.
Yeah, so obviously, I'd imagine you've been taking advantage of this kind of platform digitally since lockdown. Or?
Yeah, to say I'm a bit zoomed out is a bit of an understatement. But I think it's one of those things that it's probably shown a lot of companies that they can probably have their staff working from home rather than offices and stuff, because it's one of those things that is I suppose if you had to carry on working, it was the one thing you had to do, really.
Yeah, well, I think these kind of methods have been there quite a while, and I think it's just brought them to people's the forefront of people's minds, and obviously like the usage of Zoom and those kind of things has skyrocketed since the last few months. But I think, yeah, I agree with you. I think more and more people will be working remotely now, and it might become a bit more of the norm, I think.
Yeah, I think from my point of view, I always tend to go and see every client face to face anyway, whether that be over 2 or 3 appointments anyway. I think certainly with equity release, it can be quite complex. And I think sometimes, especially if you're going to see a couple, it's a lot easier to speak to them on the sofa face to face and explain the pros and the cons of it, and just to make sure that they fully understand the processes and the way it works. And with equity release as well, you have to have independent legal advice as well. So there's that extra layer as well. So there's face-to-face contact with your advisor, i.e. myself. There's face-to-face contact with a solicitor as well. So but touch wood, the last few months, the lenders, the surveyors, the solicitors all kind of got a way to make it work and carry on, allowing the wheel to spin on, I suppose, the last few months.
Yeah, so obviously you've been able, I take it the last few weeks now, you've started conducting face-to-face interviews a bit more, meetings, I should say.
Yeah, I mean, it purely depends on what the client wants. I mean, we can do it over the phone. Like I said, personally, I would always prefer to do it face-to-face anyway. But a lot of the time, it'll be a case of me phoning them when I'm outside the front door. They open the front door, go and sit on one end of the living room, and I go and sit in on the other end of the living room. And it can work that way. But to be honest, it's pretty much whatever the client wants. We'll do that.
Okay, so how long has the business been going, Neil? And have you always been in this kind of sector and game?
Yeah, I suppose for the last 20 years or so, probably 25 years or so, been in and around financial services. Started doing residential mortgages, I suppose, early 2000s. Went across to doing pension work as well. And probably for the last 5 or 6 years, probably specialised in the equity release, lifetime mortgages area, because that's an industry, or it's an area of financial advice that is growing and growing all the time. And I think I just made a decision to specialise in that area rather than carry on doing all the other stuff as well.
Yeah, okay, great. Well, obviously we touched upon the last few months. Have you seen a big impact on your business in terms of obviously how it's conducted, but in terms of people looking for your services, those kind of things? Have you seen a big impact from the last 3 or 4 months?
It's actually, I suppose when we first went down into lockdown, there's always that fear there as to what is going to happen. But with regards to equity release, a lot of people, I suppose you hear in the news about the bank of mum and dad and the bank of granddad and grandma type of thing. But I've done a few cases over the last few months where clients were releasing money from their property to actually gift to their children and grandchildren to help them out with their businesses and stuff. And I suppose that's one of the beauty of equity release, is that because there's no affordability checks into that as well, you don't have to make any payments if you don't want to. Then sometimes it can be easier to get the money out of the property. And for those clients, it was absolutely ideal because they're only really on state pensions or a small amount of pension income anyway. The property was going to be left to their children and grandchildren anyway. But the reality is, if the beneficiaries' businesses were potentially going to be struggling over the lockdown period, that gifted inheritance, if you like, was worth a lot more to them over the last few months than it would have been in maybe 5, 10, 20 years' time. The estate planning side of things sort of picked up as well, and I suppose that's more to do with if people are sat watching the news all the time, it is a bit sort of fear-mongering type of thing going on as well. You can't get away from all the negative news and stuff, so a lot of people were sort of getting involved or phoning about sort of wills and setting up their powers of attorney and trusts and funeral plans and stuff like that. So from a business point of view, there hasn't really been a downturn as such.
That's good to hear. Obviously, there's a lot of businesses out there that haven't been so lucky. Do you think there's that should carry on now? Do you think that obviously you do the wills and trust, that kind of thing? Are there going to be more and more people, do you think, like you say, maybe scared or, planning for the future and the...
Yeah, I think sometimes it's with financial planning, it's sometimes one of those things that people think or know they need to do, but sometimes don't always get around to it.
Yeah.
And I think it's just one of those things that, with funeral planning, for example, you've got all those prepaid funeral plans and stuff like that. Essentially, you're paying for the funeral at today's prices rather than whenever you pass away. Mm-hmm. So I think it's made people more aware of what could happen in the future, and I think it's just a case of explaining what options people have got, because whether or not they're multimillionaires or just have a small income coming in, you still need to potentially look at planning for the future.
Yeah, and do you see that? Do you deal with clients and then they realise the full spectrum of what you do, and then they use you for other services as well, or?
Pretty much, yeah. Because on the website we've got a list of services that we provide and stuff, and the majority of the work I do is essentially equity release and lifetime mortgages, and I think that is an FCA regulated product anyway, so you have to go through a full fact find, and you have to discuss things like, have they got a will in place, are they planning for long-term care or that side of things. So it's one of those things that you end up having a conversation about anyway. So yeah, it can sort of roll on then from the initial service to other services as well.
Yeah. So I think you touched upon earlier that there's quite a few myths that you like to dispel in your industry. Are there any kind of top 3 ones you would shed some light on now for us?
Yeah, I think the problem with equity releases is that it's probably had quite a bad reputation in the past in the media and stuff. And I go to speak, even nowadays, I'll go and speak to somebody and they think it is this, whereas in fact it is this. Some people think that they can lose their home from it. Well, that would not happen, because in fact, in all fairness, you're probably more at risk of losing your home from a normal residential mortgage than you are from an equity release mortgage, because you have to make payments on your mortgage, whereas with a lifetime mortgage, you don't have to make any payments. So there's that side of it. Another myth is that it's really, really expensive to do. Equity release mortgage rates at the moment, one of the lenders is just about to announce that they're going down to, I think, 2.28%. And those rates are fixed for life. So when you look at that, it's certainly not expensive. And what I tend to look at with the clients is always the worst case scenario. So if they take out, say, £30,000 from their property, and they don't make any payments whatsoever to it, then that will roll up to X amount in year 5, 10, 15, 20. And just to give people an idea, even at a rate of around 4%, the initial amount that will be borrowed would probably take around about 17 or 18 years to double. Obviously, you've got potential property price increase as well over those sort of like 15, 20 years as well. But I think it's just speaking to the client and making sure that they understand what the actual product is, because you can't lose your house from it. Some of the other issues are that the roll-up effect is quite, because essentially it's interest on interest. But you've got the options to make payments as well if you want to. You can make ad hoc payments. You can make payments every month if you want to. You can make a payment once a year. So if the roll-up of the interest is an issue for the client, then we discuss the options of making payments as well. You've got lump sums and you've got drawdowns. So if the lender would, for example, lend you £70,000, you don't have to take it all in one lump sum. You can take out, say, 30,000 now and then have 40,000 in drawdown. So for some people that are looking to enhance their retirement, that is a very good option, because they can draw down maybe a few thousand every year. And you've also got built-in, I'm a member of the Equity Release Council myself, and you've got built-in standards for that as well. The main one being the no negative equity guarantee, so that if for whatever sake, for whatever reason, the actual mortgage rolled up to more than what the property is valued at, you would never ever leave a debt to your estate, because it would be covered under that no negative equity guarantee. So there are lots of features and benefits now, even compared to 5 years ago. But a lot of people seem to get it mixed up with the old shared appreciation mortgages, or maybe home reversion schemes, even though that is a part of equity release. I've never ever done a home reversion scheme, because that is actually selling your property, whereas a lifetime mortgage is exactly the same or similar to a residential mortgage, as in it's just a first charge on the property. So that was probably more than a top 3 of this, but hopefully I'm just trying to sort of tick off some of the things that people are, when I speak to, they're concerned about those areas. But after you've generally had a discussion with them, it's not as bad as what they may have first thought.
Yeah. Do you think there's from the economy side of things? Do you think that's going to have a big impact on people taking up mortgages? Or
well, I've speaking to surveyors and stuff. When we're looking at the valuations of properties and stuff, there hasn't been any major, so we say, down valuations at the moment. I suppose as an advisor, when we put in a application, if it's slightly down valued, with everything that's going on, you can probably expect that. But I've spoke to some estate agents, and they said house sales are going through the roof at the moment. Obviously, we've got that stamp duty change that the Chancellor announced, not as much in Wales as it is in England, but still that is almost keeping the property market moving as well. So but it's things like if obviously there's going to be so many redundancy. I think I heard somebody say that there's so many people that are redundant at the moment, they just don't know it when the furlough scheme ends and stuff. And it's going to be, I think probably the beginning of next year, we're going to find out just how bad it probably is, because I think the Chancellor announced that you can have these bonuses of £1,000 per employee if you keep them on until the new year. So you can take the view that that's helping some businesses, or some people will take the view it's kicking the can down the road. I think nobody knows, and I think what we mentioned earlier is just the unknown, and that is probably more of a fear than a lot of things.
Yeah, I think it is. Yeah, like we discussed before, it's, the fear of the unknown and the and that kind of stuff. I think it's just no one knows. I think the government probably don't even know what's coming next, kind of thing. So there's no way you can plan for things, and and then obviously all the implications of not being able to plan, or not even knowing what's coming is and sadly a lot of people are going to lose their jobs, and businesses go through. But
I think that's why, like I mentioned, with a couple of cases I've done with the equity release side of things, it's when they've taken the money out to gift their children and grandchildren. It's essentially gifting their inheritance early. But the way I see it is it's much more worthwhile doing it now if it's going to help, because for one of the clients it was a restaurant in Cardiff. Now obviously if you had a restaurant for the last few months, you've lost what 4 or 5 months of income, and even now when it's reopening and stuff, you probably got what 25 to 50% of the footfall that you would have normally had, because tables have to be spaced out. If you look at what your maximum capacity was compared to what it is now, it's completely different. And you still have some people won't go to full pubs and restaurants and cafes and stuff. So I think certainly that industry and the hospitality industry is going to be really, really tough for them.
Yeah, I think it'll for a lot of businesses. Are there anything else you've got coming up, Neil, or anything you wanna plug or mention?
No, apart from myself, I think I'll do enough plugging myself anyway. But yeah, it's just to really thank you for the chance to have this conversation and stuff, because it's sometimes tough to get the sort of truth about equity release out there sometimes, because it is, I said, with some of the myths, and just like you hear some people say you can lose your house from it. Well, no, you can't lose your house from it, and it is actually a good product for the right person. I'm not saying it's for everybody, but that's why we will go there, have the discussion with the client, and make sure it is the right product for them, because you've got the residential mortgages, you've got retirement interest only mortgages as well, you can look at downsizing as well if feasible. But I think sometimes within the South Wales area, property prices are not as big as say up in London, so downsizing isn't really an option for a lot of people. But yeah, just want to thank you really for the opportunity to come on and do my pitch, so to speak.
No problem at all. It's a pleasure to have you on. And yeah, if anyone wants to find out a bit more about equity release or any of that kind of stuff, then give Neil a shout. You can find him in the financial services category on our app. So if you're in and around Cwmbran, South Wales area, download the app, bang your postcode in, and you'll find Neil in there, or hit the search and type in Reynolds or finance or mortgage equity release. I think you should come up with all of those search terms. So yeah, I think that pretty much wraps it up. Neil, thanks again for coming on, and I'm pretty sure a lot of listeners and viewers will find that quite interesting, and thanks for shining a light on some of those myths. And yeah, like I said, if anyone's got any questions, I'm sure Neil will be happy to answer them. If you want to bang any in the comments below, all that kind of stuff.
Even if it's just literally a 5-minute conversation, if anybody has a question, then my mobile phone's always switched on.
Okay, great. Well, yeah, thanks again, Neil, and thank you all for listening and watching, if you're still there. And yeah.
No.
Okay, well, yeah, thanks, Neil.
Thank you, Mike. I appreciate it. Thanks, mate.
No worries. Bye-bye.
Bye-bye now.